Great to be
How
here.
are you thinking about the Fed? You think they're done?
So I think they're definitely going to pause in June, and they have to because of the debt ceiling and some of the liquidity issues around that. To the extent that we have our slow credit contraction going on without an event, it's likely to be a skip. And they could be back at it in the autumn.
Is that why you suggest that it's going to still be a difficult environment for equities?
So I see three reasons for why there's a difficult environment for equities. The first is that gap in the pricing between where the Fed is saying they are and where the market is. And agree with Steve Leisman, of course, we have some mispricing because of the debt ceiling. But to the extent that equities have rallied because inflation has moved lower and the bond market is pricing in cuts by the end of the year, you get a higher multiple. So if you take that out, if you take that cut by the end of the year out, then equities have to come and meet the new curve on the Fed pricing. The second reason, of course, in the event that there is some sort of credit event, let's call it 10%, that something really bad out there could happen because it is a Fed tightening cycle, then, of course, equities are still going to have a problem, even if the Fed cuts, because there'll be an event. And, of course, the third reason is the liquidity issue that happens. We are assuming the debt ceiling gets signed, but when that happens, the Treasury issuance and the T-bill issuance from Treasury could cause a little bit of volatility.
I hear many people suggesting that. I hear most people paint a worrisome story about the market for the reasons why they're not bullish, and being a bear is easy at this point.
Very easy.
Why not talk more about the strength in the economy and the resilience of the stock market in the face of all of that, and the fact that the Fed might in fact be done? Remember, we're going to get more inflation prints when the Fed is allegedly out of the game. Even if it's sitting on the bench temporarily, they're still out of the game. Why aren't more people talking about that?
Because it just feels that with 500 basis points of hiking in 12 or 13 months, you're bound to get some event that happens and some slowdown. But I agree with you. We think by the end of the year, the market could be fine and you could even rally from here. What we're talking about is that short-term volatility when all these issues come together. So the debt ceiling, the Treasury issue, the T-bill issuance, the issue of whether or not the Fed has to reprice on Fed hikes. But then the bottom line is the economy's been great. The data have held up better than expected. CPI is still 4.9, although the core is higher, as you know, at 5.5. So that's the issue that really has to happen. If the data go in the right way, the Fed, of course, could pause. But even if they pause, that pause is still not a cut. And it's still higher than where the market is pricing in the end of the year.
So what do you make, since we started the show with NVIDIA and it's just all things and all roads seem to lead to AI and a mega cap tech trade, what do you make of it here? Is it vulnerable?
I think it's extended and vulnerable. It's clear why investors flock there after the epic sell-off of last year and the excitement over AI. And let's talk about the cash flow funding models for large companies that don't really need to borrow and can fund their models. So it does make sense to a point, but they're very extended if you look at the 200-day or 50-day. So vulnerable, but not fundamentally vulnerable, not like last year, where it was a bit existential about how high inflation was going to go and where the Fed was going to go, compressing the multiples. We're more or less going to finish around 5 or 5.25. I don't think we're getting awfully higher than that. And with that, the multiples can hang in there. They're very extended. They could be vulnerable to some sort of pullback and some sort of event out there. But I don't think this is a fundamental story.
So what about, like Jim Breyer, the investor, was saying again out at our summit out in California, that this is akin to the 95 period of the internet that early, and that these core stocks, we're not talking about the pets.coms of the world. We're talking about the companies that are going to be the leaders. And as the Stacey Rascons of the world suggest, the total addressable market possibilities are so large. And again, as Jim Breyer suggested, to use a golf analogy, we're only on the second hole of all of this. Are we fully appreciating the power of this transformational technology and also what it means to earnings and then these stocks?
So that's a great question, because I think if you make the 95 analogy, I think we didn't know who the winners were going to be in 95, although we knew the world was changing. and we knew it was going to be enormous. We don't know how enormous yet. I think the sense that incumbents and large incumbents can win this because of that, I think that gains some credibility here. It'd be very, very hard, I think, for smaller players to come in here. They'll get eaten up. They'll get eaten up by the incumbents that have free cash flow and don't need to float debt in order to do this.
I mean, in other words, you see through the noise this time, right?
Yes.
It's like you can't just be any company and suggest, well, AI this, and we do this in AI, and we're going to be huge in the total addressable market, blah, blah, blah.
The incumbents
we'll
win.
See through that this time, I think.
I think the incumbents win. We just don't know how they're going to be reordered on the puzzle, right? Like, we just don't know who is going to be the ultimate winner. You know, I like to talk about, you know, there were times in 99, 2000, 2001, there were a couple of companies vying for the best of, and one fell out, and really wasn't clear at the time which one was going to fall out. You may have something like that here, but I think the excitement is real. There is going to be pressure from Washington to regulate some of this, but as we've seen, very hard for Washington to regulate tech that they simply don't understand.
Yeah, all right. It's good to have you here. Thank you.
Thanks, Scott.
Alicia Levine.